We're going to have a panel now, a discussion. We're going to talk about security tokens and future of venture capital, so future of investments. So why security tokens could be the next big crypto trend, the title of the panel. And the moderator of this panel is, again, my good old friend, Ogeday Karahan from EY Central and Southeast Europe. Round of applause for Ogeday. Thanks for coming.
Thanks for the invitation. It's always great to be here at the fore end of innovation and fore end of new technologies.
Thanks.
Thank you.
So we also have Burak Yenigün from Status Capital. A big round of applause for him as well.
Hi.
Thanks for coming. So I'm leaving the stage to you.
Great.
As the moderator.
Thank you. Thank you, Ada.
So, thank you.
Okay, so you already know Ravi Kurani from earlier work. This looks like it's me. All right, I'm not going to move. I'm standing still. All right. And our other panelist is Burak Yenigün from Status Capital. And, okay. I have so much static.
Just 10 seconds. See, look. It's 10, 9, 8. Heyecan yarattın değil mi bir anda? It's okay. Another few words I'm going to say in Turkish. Ogeday daha önce inovasyon konferansında buradaydı. Değil mi? Yine çok keyifli bir panel etmiştir.
Teşekkür ederim. Thank you, Ada.
Bizim sistemler Ogeday'ın Türkçe konuşmasına alışkın. İngilizce konuşunca hala birazcık arıza verebiliyorlar. Again, I'm doing the stage to you.
No,
Thanks.
I thought it was us like shaking and then I got all the static from you. Which now goes away, so.
Maybe that.
But,
Okay.
Okay, you know, we're going to talk about why security tokens could be the next big thing, the big crypto trend. And, you know, so most of you would know token issuance is going leaps and, you know, and bounds. And only in last year, it's been more than $5.5 billion of issuance by 435 ICOs. Now, more than half of that took place in the final quarter of 2017. So there's definitely a lot of you know, interest, money coming in. There's also a lot of, you know, offerings coming out. And now most of that is in utility tokens. And now we're here to talk about security tokens. So my first question to my dear panelists would be, so what is the difference between a security token and a utility token?
Yeah, first of all, just a little bit about myself. I'm Burak Yenigün, founder of Status Capital. We are a US-based SEC-registered investment advisor with $30 million under management. I started the company from a spare bedroom 4 years ago. So we were also the first high-frequency traders in Turkey, doing 10% of the Borsa Istanbul futures volume at one point. Yeah, basically, my firm tries to identify mispricings in public markets and try to take advantage of them for our investors. So I guess to go back to your question about utility tokens versus security tokens, my understanding is that a utility token is a token that actually gives you the right, like a coupon, to use a product or a service. It does not entitle to you a certain cash flow stream like an equity or a bond could do. It's literally a right to use a service, like an in-platform token, like an in-platform currency. Whereas a security token is a lot more similar to a typical security. You can think about equities or bonds, but also other structured products. There are other types of, you know, private market, privately traded or private market sold instruments that actually give entitlement to a certain share of revenues. So security tokens, in my mind, is just that under that broader category.
Anything to add, Ravi?
No, I think it's a great definition. Yeah, security tokens, I think there's a lot of discussion around regulation, which we'll get into, and I think security tokens are on the end where it's very clear that they fall under financial regulation.
Great, thank you. And again, as this growth in the utility tokens happening and the security token discussions beginning, again, some of you might remember SEC released a guidance last year, mid-year, around July, I guess, and they said that any offering or sale of digital tokens will be subject to requirements of the federal securities law. And still people go on and issue tokens, but now maybe more prudent with the way that their utility token is really representing their respective business model. And at the same time, we have a lot of exchanges in the market where these digital cryptocurrencies are exchanged, but they also became a bit more prudent with following the SEC declaration. Now, why suddenly now? Why at the end of 2017 all these things started to come up? What's happening?
Yeah, I think it's basically, I mean, there was a talk earlier today around institutionalization of this whole environment, and I think it makes total sense that after the first wave of kind of exploring this technology and exploring the different use cases, it has now become apparent that we can use blockchain and the benefits that it has also for traditional assets and bring traditional assets onto this technology. And I think this is basically now the next wave, or what a lot of people have realized and what they are trying.
Okay, Burak?
Yeah, so I guess the why now question could also be framed as, why is it suddenly, because there's all this narrative about security tokens suddenly bringing liquidity where the liquidity was never there before. And I'm optimistic about that. And I guess the question is, why would that happen? I think there are two reasons, I think. One is that traditionally when you do a private placement, or if you have a private structure like a VC fund or a private equity, it has historically been not very easy to trade these shares. There has been companies that try, and I guess the VC firms are, that they're a lot more used to thinking like this, the why now question. So there has been other startups that try to do this, like shares post second market. I guess the big question is, why is the security tokens suddenly bringing liquidity in this area where so many other people tried? So I guess one thing is that I think it makes it incrementally easier to trade. It could be, it may be a huge increment or a smaller increment. I don't know the answer to that question, but it does look like it's gonna, just out of fungibility and the global audience, it makes the whole process of buying private shares easier. And even if there's just a 20–30% improvement, that could suddenly dramatically improve liquidity. We have similar ideas with other things, like Uber not only grabbed market share, but it also expanded the market because it just made things marginally, well, I think it made it a lot better, but even if it did marginally better, or less costly, it can explode the demand. And the other thing is that there has been, I think, never been the kind of speculative demand in private assets as we have now in the past. So as you probably know, the liquidity attracts liquidity, which is why exchanges kind of incentivize high-frequency traders, etc., to come and provide that initial liquidity. So suddenly we had this huge liquidity event in the private markets, which could kind of create its own virtuous cycle dynamic. And even though this speculative current rush could kind of subside in the future, that could create a continuous source of liquidity.
Okay. So one thing I've been also thinking of is, like, it also bridges the traditional systems, the traditional markets with the more modern markets, like a staple coin, and also think about the question as when the first car was launched. People were thinking, okay, is this just going to be a faster horse, or is this going to be something else? And over years, we saw that it turned into something more than a horse, definitely. So what do you think about that? I mean, how is this going with also the regulators really not stifling the development, but trying to put more regulations around the system? So how do you see that development?
Yeah, so I guess recently the SEC chairman issued a statement during he said something at a Senate hearing where he basically said, every ICO that I ever looked at is a security. So I think that that's just pointing, at least from a US perspective, I'm not very familiar with the other jurisdictions, but from a US perspective, it sounds like the regulators are going to treat these as securities. And there's the hobby taste, obviously, but I guess the general impression, you know, perhaps why the chairman said what he said was that people who are buying tokens are obviously, at least in the current market space, they are profit motivated. And therefore, I think there's going to be that kind of regulatory structure around it that's gonna follow. Now, that does not necessarily mean that, you know, it's going to be just you know, something very old, just in a new form. I think there's probably certain frictions that a tokenized security offering could eliminate, like a ease of trading, like having a global audience all at once from a US-based exchange, where, you know, people from China, Europe, etc., they could register in the US into a particular exchange and then suddenly have access to all these private companies. I mean, we were talking about this. I mean, for example, for me, I never ever invested in a private company before through one of those exchanges, like, you know, Borsa Istanbul's private exchange, and, you know, there's in the UK there is Nex, just because of the fact that there are not major hurdles, there are small hurdles to get access to those exchanges. And so even if you can remove those hurdles just a little bit, just by tokenizing these assets, the impact could be huge, even if you still have to play by the existing regulations.
Darby, anything
Yeah,
to add?
I fully agree. I mean, to boil it down really, right now I think you have two reasons why tokens and also security tokens are so popular. It's one, it reduces friction. So it basically, it's a security that uses blockchain as a technology. So it's really nothing different. It's basically the same thing as securities that we've had before, but it reduces friction because it doesn't need hundreds of pages of contracts and so on. So that means really that you're able to give liquidity to asset classes where it wasn't possible before. I think that's one huge thing. And I think the other huge thing, and we discussed this quite heatedly yesterday, is the regulation. So right now the regulation is somewhat lower, or in some cases also undefined, for example, compared to other liquid assets, because it's not like we don't have liquid assets. We have, I mean, and we have the perfect person here. I mean, high frequency trading is based on highly liquid assets. However, I think today there are some cases that are still that haven't been really looked at, for example. So insider trading is going to be a huge problem with tokens that hasn't really been addressed today. I mean, there was some, so for example, Coinbase had some issues with that, and they issued a statement that their employees are not allowed to trade tokens, I believe only that are traded on Coinbase, for example. But for example, with tokenized VC funds, and so there are going to be challenges around insider trading that haven't been addressed today. So the question that I have for myself is, for the regulatory part, I think there's more that we will see, and the question is, does the same regulation that is required for stocks, does that also really have to hold for tokens in the end, because it's an equally liquid asset? And if I were the regulator, so the regulator's job is to protect the consumer. So if I have to protect the consumer, if I have a stock that everyone can trade and I have a token that everyone can trade, I would basically make sure that the consumer is protected in a similar way. So this could, again, then take away some of the edge that tokens have today. But I agree with what was said, that also the infrastructure and the basically automation part is a huge deal that will continue to prevail.
Okay, so we're, again, in the maybe very early stages of this new disruptive, investment mechanism. Would it be right to say that we can expect to see more Carl Icahns of the modern era coming up with, like, tokenized takeovers and all this kind of stuff?
Yeah, that's That's something that that's probably one of my favorite 2018 pet ideas. It's something I think about a lot. So perhaps in 80s the high yield bond market was very, very small, and then there was a particular investment bank that made them a lot more mainstream and appealing to the broader audience. And there were a lot of players, a lot of activist investors or corporate traders, as they were called back then, that used this availability of cheap financing to kind of make basically very aggressive attacks, quote unquote, at public companies. So it was basically, you had a low cost of funding, you had a low cost of capital, you issued something at a low cost of capital, and then you acquired something at a higher return on capital. So this is more leveraged buyouts, but originally the whole thing started by people like Carl Icahn. They were the trailblazers, and you may know him from his more recent take on Apple, forcing the board to kind of return more capital to shareholders. So I'm wondering what happens if in 2018 somebody runs an ICO, somebody as aggressive as a young Carl Icahn, just ICOs to take over existing businesses that are tokenizable. So let's say you have an existing business. It could be a chain of cafes, it could be a chain of automotive aftermarket parts. And then if it has a good token model, what happens if somebody either first buys the company and then ICOs it, or specifically ICOs, just as Carl Icahn did when he was taking over a major petrol company. He just raises the ICO and tries to acquire the company. So this is one thing, one interesting thing that I think might happen in 2018. And then the other thing is that the security tokens, I think the other big opportunity is in the stablecoin domain. Because I mean, my understanding is that well, whenever I look at a stablecoin design, I haven't quite seen one that I find viable yet, but the problem often is that there is no link between a real asset and a crypto asset. So there's that link between the real world and the crypto world is still very much a work in progress, in the sense that you do not have digital representations of assets nearly as much as we want them to be. What if you had a real estate token, a tokenized real estate that can be used as a collateral in some of the current stable coin mechanisms, instead of their current collaterals like Ethereum and Bitcoin, etc., which are, in a crash, these things all are going to move together, and that currency peg may not hold. So that's one big appeal of the other big appeal of security tokens, and also this prediction markets could also create this link. But I think the security tokens in the short term, they are the more viable candidate for doing this functionality.
Great. So maybe just to wrap up what we have talked and probably provide an opportunity for maybe one or two questions, but it looks like many governments are now trying to tackle this securitization. They're trying to put some serious regulations around it. And while it may look like they're kind of choking the system, actually it may also allow institutional investors to come in. It will allow companies to do security token offerings more comfortably in a more defined market, reaching out more investors, including retail investors. We talked a little bit about the efficiencies that this can bring to the system, including issuance becoming more cheaper, trading becoming more efficient. And as a third point, we're also seeing as well a lot of companies trying to make offerings, also a lot of investors with the, sometimes with the fear of missing, not to miss out, still flocking the market. So based on these, I think it would be wise to say that at least in the near term, security token offerings will start getting more share of ICOs and keep growing.
Yeah, absolutely.
Okay. Do we have a moment for a question to the audience? No, we don't. So we will be receiving you during the break. Thank you very much. Thanks. Thank you very much, everyone.